Awesome. Welcome back. It is March 13th, 2021. And well, last week was grim. The stock has been
Down is an understatement.
yeah, well,
Well,
yeah.
flat, really, but
No, down. A lot of stocks fell about 50%.
oh, okay.
The when we recorded our last podcast, the 2 weeks before, a lot of stocks were down. Some were down as far as 50%. In the, I don't know if you can call it a crash or a correction.
This is red days.
Yeah, just 2 weeks. 2 weeks of red, basically. But this last week was not bad. We did mention we were gonna move out of Nokia into something else last week.
To EXPI.
EXPI, and we did. Monday morning, almost immediately, basically, we sold our shares of Nokia and moved into EXPI. And our reasoning behind that, and correct me if I'm wrong, is that Nokia is pretty stable around the $4 mark. It doesn't really move too much up or too much down from that point, and we wanted something that could while the market recovers, gave us more potential of like
Something more volatile.
yeah.
I think
Well, not
volatile doesn't have to be bad, right? It's just something that moves at least.
moves a lot.
Yeah.
Yeah. Something that moves
With a lot of volume.
more. Yeah.
Right.
Yeah, and so I mean, like, if you look at the past week, the market did recover a little bit. Hopefully, this is the beginning of more, and not just like a bull trap,
yeah.
or like just a technically, I mean, if you look at the graphs, it is still a lower high. It's not a it's a higher low, but not a lower. It's not a higher high.
Yeah.
So I mean, it's a higher low, but not a higher high. Now, I mean, if you look at Nokia, because this was the position we were in for quite a few weeks. It followed the market to recover, and it did recover. Quite a bit. What would you call this? Let's bring that ruler from its low. Let's call it the low here. It recovered
11%.
11%. Not bad. Not bad. It's now at 422. We did move into EXPI, and I'll move Nokia to the red list soon. Where's EXPI? EXPI. Now we did buy at the beginning of the day, so we bought on the day. We bought EXPI at its highest. Where was the 830? Yeah. So 830 on March. It was March 8th. Where's March 8th? Boom.
9:30?
One before.
Oh,
Yeah.
okay.
Yeah.
The candle weight.
Yeah.
Okay.
And so, well, maybe not the tippy top, but somewhere in the middle here. We bought at 45. And now that day was a little bit grim because it did fall all the way down to what, 39?
39, 40. Yeah.
Between 39 and 40. And the only loss, we knew we wanted to move positions, and we moved our position to EXPI. The only loss of buying at the beginning of the day as opposed to the end of the day is just that maybe we could have afforded one more share. That's really it. But after that, it followed the rest of the market and went and recovered. I did it wrong. Instead of on the bottom, we should have went from. No, because we were already in a position. Yeah. And so let's look here. Let's look at EXPI, what we bought around. Let's go to our TD Ameritrade real quick. We're up. If you look at this graph, it looks really great. Boom, 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 boom. We're on a uptrend.
What was our lowest point? What was that?
Our lowest point was 356.
Dang.
Yeah. That.
All right.
That was
Monday. Yeah. Okay. Well, it's
yeah.
We're back on an uptrend.
Yeah, we're back on an uptrend. Let's see here. We bought. Does it say here?
8 shares.
We bought 8 shares. We bought 8 shares at
Open. Okay, 46.92. 47? No.
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 This is just where the stock
The day
is.
was, yeah. Okay.
It does not say where we bought it at.
Hmm.
Well, thanks, TD Ameritrade.
we could just guesstimate.
Yeah. I mean, it was 45 something. So if we look here, let's just take it. Let's do 45.50. That's a pretty middle. And then to right now, it is a 15% gain.
So that was the correct move.
Yeah. So that was a good move. We made more in EXPI during this recovery than
if we just
stayed in Nokia. Yeah. And so we're both pretty happy about it. That's
now just EXPI back to 200 or something. Right?
Yeah. I mean, if you look at EXPI from here to, let's take the ruler. Its highest was like 90, right?
Yeah. Well, this is post split.
This is but we're trading post split anyway.
Oh yeah, that's true.
Yeah. So
70%.
Yeah. I mean, if it wants to go back to its all-time high, that's a 70% gain.
I'm not stopping. We're not stopping it. Like,
yeah. And I mean, at some point we drew this line, and so hypothetically, if this was the bottom, then this.
I think the new line follows this, like this low, and this low, right?
Yeah.
So it's like,
well, that's what we talked about last time. Yeah. That this line is a straight line, but there's almost a curve here you can follow.
Well, I mean, isn't it like the TA thing? Like, you don't have to get all the lows, right? You just have to get like the past 3 or something like that.
Yeah,
so that's why. Just this.
Yeah. But zooming out, you do see like there is this like nice parabolic almost support. It just kind of goes like that.
Yeah.
So which is great. It's it's not linear. It's more exponential. But hypothetically, it could slowly move, and it might take a little while to get back up to this all-time high, and it might correct a couple ways on the way up.
Yeah.
But I could expect this thing to go up to $200.
Okay. That's good. Also, I guess I don't know.
No, not $200.
100.
I'm thinking about pre-split.
Oh,
but we're trading
post-split. Yeah.
Post-split.
So I mean, just on that kind of note, so like I don't know, everyone's talking about like the Fed raising like rates, right, and everything like that, and that will obviously have an effect on housing. And since EXPI is a housing stock, we probably should. I mean, like, do you have any thoughts on that, or do you think we should? That's something we just need to keep our eyes on.
Is it confirmed that the interest rates are going to go up?
I don't know. Just
because the guy I can't remember his name, but the Fed guy, the guy.
Powell?
Yeah, I'm pretty sure that's it.
Okay.
He says that interest rates are not going to raise.
I know, but the government always likes to say that, right? They just like they take go up just a little bit.
Yeah.
And then all the investors out of their minds already, right?
Yeah.
But I mean, that's definitely something we're gonna have to pay attention to, at least with EXPI, because it's a real estate company.
Yeah,
right?
it is a real estate company, but to go into real estate, and this is kind of your thing. I'm more, I guess, naive or ignorant or just uneducated in the subject. But I mean, housing is necessary. It's just one of the basic necessities, right? You have food, water, and shelter, right?
Okay.
So housing is shelter is the third one. As a real estate agent, you deal in both selling and buying. Yeah? So it's not like if people can't buy, you'll still have people that need to sell.
But then who are they going to sell it to if there's no buyers?
Right. Well, now
I mean, I'm just putting Austin aside, right? Because Austin's a really hot market. Austin's the exception, not the rule, right?
Yeah, no, and that's what I was gonna bring up, because like in like a regular place, if you have a lot of sellers and no buyers, then you have low demand and high supply,
Mm-hmm.
right? And that would drive prices down.
Well, that would bring the demand down a little bit, right? Because it's more expensive for people to get mortgages, right,
Yeah,
or
yeah,
something
yeah.
like that. So there's not as much
Right. Yeah, that's
demand,
what I meant.
right? So the supply is up here, but the demand
Right.
is coming.
Yeah.
It's coming
So
down.
with more sellers and less buyers, you have less demand and more supply, and whenever that happens, that drives prices down. Now, um, regardless of regardless of housing prices, they still need real estate agents to facilitate the selling of those.
Well, you don't have to, but like, yeah, we make it easy for people, right?
Right. So and this goes into the other thing also, the other stock that I like,
Uh-huh.
GHVI, Matterport, the whole VR money and gold. Where am I going? GHVI. This is that we'll go into this a lot more, but this has to do with real estate also because these guys do the AR, the augmented reality of
Oh
the
yeah.
of home modeling
Uh-huh.
basically, and that assists in like the marketing of places and the management of places too, when you know when you know exactly the space, but you don't have to physically be at that space. That our conversation right now affects a couple of other companies that I'm also looking in. But for EXPI, um, um, well, one thing about EXPI is through the pandemic, uh, a lot of like traditional real estate firms, is that what you call it?
Brokerages.
Brokerages. Uh, they could not work in offices,
Yeah.
right? So they were kind of hit by the fact that there was a shelter in place kind of quarantine thing going on. Whereas agents that worked with EXPI, uh,
We work from home anyway,
yeah,
right? So it doesn't
yeah.
matter.
Well, you guys work from home, but EXPI also has the whole virtual office thing going on.
Yeah,
Yeah,
that's true. Yeah.
yeah, and so that's that. Going back to our last conversation, being that we're fortunate enough to be in Austin,
Mm-hmm.
even if you don't, even if everybody wants to buy, your market's kind of nationwide because there's people from all over the place.
International EXP.
Yeah.
EXP's in like
Well, yeah.
a bunch of other countries too.
But as a real estate agent in Austin,
Uh-huh.
right? If in Austin, like, if somebody who lives in Austin cannot buy a home and needs to sell their home, there's gonna be somebody from outside of Austin that wants to move to Austin.
Yeah. Okay.
You know, and so but that's just, and like you mentioned, EXPI is international, so like one city in the whole market isn't really going to,
Yeah.
isn't really gonna affect too much for the.
No, but I'm talking about like other markets, right? Because our whole conversation with this started with like Fed raising rates, right?
Right, yeah,
So
yeah.
like at least for America, right? Because isn't the thing like, at least for real estate investors too, right? Like when the Fed raises rates, it's just more. I think it's just more of an attractive investment to just go into bonds, right? Rather than just like. Get a
Well,
loan
didn't
or
they have like the
stuff
whole
like
bond
that.
auction thing, and didn't affect it didn't affect um the market. The market still recovered. I gotta look into that. I'm pretty sure
Okay.
they just this last week they had bond auctions.
Okay, well I'll take
Yeah,
your word for it.
yeah.
I haven't really been paying much attention to
Yeah,
that.
yeah.
But
I think nowadays it's also bonds are, because it's like a 10-year bond. Like
I
a
know,
5-year
yeah.
bond, 10-year bond.
But
It's just
that's why, right? So like, there's more to real estate than just like people, just like, buying a
buying
house
houses.
for themselves, right?
Yeah,
There's the whole real estate like investment
yeah,
aspect of it, and that's kind of what I'd like to focus
yeah,
on,
yeah.
right?
You
So
know, you know. Talking about real estate and investments and stuff like that. I learned that there's a way you can add your real estate investments to your Roth IRAs, which I was like, huh.
huh? gotta get some real estate investments.
Yeah. Well, and the thing, if you don't know
you could probably just like buy a REIT or something, and then you can. Could you add that to like your Roth or?
Probably.
Oh, okay.
Yeah. The thing about Roth IRAs, like, I was told you could, but I wasn't given like the expanded explanation on how. Yeah. And so, but the thing, if you don't know about Roth IRAs, is that it is you don't have to pay tax on it.
When you withdraw, when you put in, you do.
And that's when you pay tax.
That's when you pay tax, right?
Yeah.
So you pay the tax now, and then hopefully as everything appreciates in value, right, over a long period of time, right? So
when you withdraw,
like you don't have to pay the taxes then, which is really good. I think.
Yeah. Which I kind of want to look into.
Get one, max it out every year.
Yeah.
Let's do it. You'll be happy.
Yeah. My portfolio right now. I mean, okay, so before we go off onto tangents like we usually do, our Nagamera is slowly recovering. Now I'm gonna hurt everybody here real quick and go to our year to date.
Oh no.
Yeah. I'm gonna like.
Yeah, we got a long road to recover.
We got a long way to go.
Yeah.
Right.
Yep.
But we're on our way.
Yeah.
Yeah.
It's the journey, not the destination.
Exactly.
That's how I cope with all this.
Exactly. Hopefully, all that we've learned down here will add to when we're back up here.
Yeah.
So we're on our way. We're at 446. It's a far cry from where we started of a grand, but one of the most valuable lessons we've learned is that patience pays.
Yeah.
And
that's something I knew trading crypto and stuff like that.
Yeah.
But I just forgot it again for stocks for some reason.
Yeah, because it's just it's so exciting, and I've done it also. Like every morning you check and you look at which stocks has the most gain. You sell some positions and you move into those stocks. And then you either make a little bit more money, or as soon as you buy you didn't know, but you bought the high and it falls. So you really don't know. But I mean, like if you look at the history of the stocks that we've invested in, I mean, EXPI. I mean, we had a position.
What was the first stock we went into?
The first stock we went into?
Yeah.
Ooh, what was that? Do we remember? Can I look into
our trading history?
Yeah, is there order statuses, IPO?
Were we in MVIS at 1.2?
We were, yeah.
Yeah.
It doesn't stay. Statements, maybe, if there's a statement thing.
Saved orders?
What's saved orders?
No.
My account.
Cost basis, maybe. Go to cost basis.
Well, here's something.
Switchback, SBE, I think. Right.
Is that the very first?
That was one of our very first.
Yeah.
Right. We started with like 3.
Let's go back. No. Let's go back to January.
December 2020, or.
Yeah, this 2020 view. Switchback, really?
Yeah, Switchback. Okay, well, I'm just like, okay, Switchback, SVE, like, how's Switchback doing this day, right? So, like, assuming if we just held Switchback.
Oh, no.
Right?
Remember when we first did it, we had Switchback, HBP, and CCL.
Yeah.
Right? Because we were diversifying in the very beginning.
Yeah, we shouldn't have diversified.
Yeah.
But, like,
I mean,
okay, how's CCL doing?
Well, okay.
Or, like...
CCL, we go back, we sold at... Does it say?
This is just an adjusted cost. All you have to do is
divide
this by 20.
Oh, okay. Let's do that real quick.
Right.
We're here. It's a slower day. It's gloomy. It's
raining
it's
outside.
snowing. Yeah, I mean it's not snowing. It's raining outside. What we got? 4, 6. 2.
Okay, so we lost money.
Yeah.
We lost money on that.
Yeah, not so much as the other ones.
Divide by 20, right?
Divide by 20 equal
23.
23. CCL now is at 28.
So I mean, like, we would have made a small gain if you just
we would have made a small gain.
All right, like SBE, right?
Yeah. SBE, there is no SBE anymore, and I
Oh.
don't remember which ticker it is because the merged happened.
Oh, okay,
It merged. But I believe when it merged, it went up to like 37.38. And so switch back. When we first bought it, we bought it at 161, is that right?
We bought 5 shares for 161 divided by 5, basically. Yeah.
32.
The $32 for
$32 a share. It would have been right at merger. It was like 37.38. So another small gain. EXPI was the big one because you can look here. We bought what divided by 10. That's 750 divided by 10. That's easily doing easy math. That's $75. $75. And that's pre-split. So 75 times, it went up to what, like 80 something?
Was it really? Well, I didn't.
I thought we bought it like 62. So
wait, EXPI. I thought we. Oh no, we were looking at it since like 40, right? Yeah.
Yeah. We've been looking at it since 40 when we first talked about it. Now Microvision, looking at Microvision, that's one that I'm still in personally, but we put 926, 10 divided by 135. We bought at $6.86. Oh my goodness. We bought at $6.86, and of course Microvision now, its highest was 24.
So we could have just doubled how we just stayed in. Yeah.
Yeah.
So
it's been a lesson in patience.
Yes. This is why just buy and hold. Like don't sell every week like we used to do.
Yeah.
Not burn for it.
Yeah. And so I mean, so we've been putting it all in on everything. And if you look at our own personal trading habits, you put all in.
I'm always all in.
Yeah. You pick you pick crypto, stock, whatever. You like it, you put all everything all in on it. I like to diversify, but I say if you're gonna diversify, I mean if every I want to say like long time, the old school way to trade is not financial advice. We're two idiots just
who lost $600, right?
We lost $600, so don't listen to what we say. But the old school safe way to invest is you create a investment portfolio. That investment portfolio means it has a whole bunch of stocks in it. It's diversified. So if one sector falls, the other sector will prop it up. So your growth hopefully is very
slow
linear.
And steady, right?
Slow and steady.
I get that.
Yeah.
But starting out when I had no money, that slow and steady growth would have probably taken me centuries. Which is why I like to go all in, right? Because I'm more risk tolerant, right?
Yeah.
And so that's why.
Yeah, and that's a good word to say if you're more risk tolerant. Like I would say if you're 18, like go for it. Put everything you have into GME. That would be my suggestion.
Not right now, but like.
Well, I don't know. Sure? I think GME's got a long way to go.
Is the squeeze like has it?
The squeeze is still being squeezed. It's a slow squeeze. Okay. Yeah, the squeeze is still being squeezed. It's a very short. It's a very long, drawn out squeeze. And then the only reason is why is as long as GME is this high, there are still people trying to squeeze it.
Okay.
Like as long as GME is still this high, people are still trying to short it.
Okay.
But as long as there's a GME and there's a Wall Street Bets,
we'll keep upping it.
Yeah, nobody will sell. So keep shorting it.
Okay,
it's not going to go down.
Yeah, if you're 18 and you just got a couple $100, just all into like meme stocks.
Yeah.
Not financial advice.
Right. if you're 65 and you're looking at retirement, diversify. If you lose everything, you become homeless.
I know, but like if you're 65 and you only have $1,000 to invest anyway, like that's. I feel like you have bigger problems.
Yeah, that's true. It's true. You do have bigger problems, but yeah, that's true because you can't really. I mean, 65 with 1,000 with a grand, it's not much. But if you're 65 with like 500 grand, yeah, still
Even
does.
even that technically, you need 3 million to like retire in this day and age in America.
Right,
It's
right, right.
crazy.
But with 500 grand, and say you bought GME at the very top,
Hmm.
and you put 500 grand into GME at the very top, and then it falls.
But what if you put 500 grand in GMA at the very bottom?
Well, see, that's the
I
thing.
know, right?
We don't know. We don't know what the top and bottom are.
Yeah.
Right. So he's very risk tolerant, and he likes to go all in. I diversify, and I've been doing well, on my own. So
It's really just depends on who you are.
yeah, yeah, it depends on who you are, and you got to make that decision yourself. And you can't look at like people on YouTube, people on Instagram. Yeah, exactly. That's what I'm saying. I mean, like, you're looking at somebody who is like, well, that guy put it all in on this one thing, and he's like, he's doing well right now. Like, maybe I can do the same. Well, the problem with that is the time, like like somebody who made millions on one stock, one share,
Mm-hmm.
may have, like, for example, Tesla. If you put all in on Tesla back in 2019, you'd be very well off now. But if you put all in on Tesla now, like, Tesla's gone from 800 to,
Did it finally correct?
yeah, it went down to like 500 something.
693.
Yeah. See, right here, if you bought Tesla around this area, you would have bought it around 800, and it would have fall all the way down to
I still have
560.
Tesla valued at like 300. Like,
Yeah. And some people still think that this company is way overvalued.
Yeah.
My thing with Tesla is that, like, they have a lot of pre-orders, right? They cannot meet their demand. They're having what do you call it? Deadline problems.
Oh, okay.
And after, even if you receive your Tesla, you'll have quality
Issues.
quality control issues. So for me, like I'm surprised Toyota's not this high, because
Yeah.
Toyota will
We-
deliver
I
time
think we
and time
talked
again.
about this, right?
Yeah, we talked about it before.
Like
in
second episode or something.
in a
Yeah.
past episode, yeah.
Yeah.
But that's what I'm saying. Back in 2019, like, this is still 20. Yeah, like, say October 2019, right? You bought, some guy buys a whole bunch of Tesla, and has made his millions, right? You see that, and you're like, oh, maybe if I buy Tesla, I'll make millions too.
Yeah,
But it's
like
not. That
10
is not,
years, right?
Yeah,
Like, you gotta-
that's not the case, because you would have lost a lot of money here. So you kind of have to. It's a very risky. I wouldn't call it game, but it's a very risky way to make money.
Yeah.
You know what I mean? I will say that I do swing. Well, okay.
Are you about to like contradict
Yeah,
yourself?
I'm going to contradict myself. Now, I have made a decent amount of gains by swing trading and diversifying at the same time, just to have, like, a set of stocks that I'm going in and out, and then having another set that I'm moving back into.
Mhm.
That's a lot of movement. And that's what I'm doing, and I have the time to do it, and it's exciting, I'm not going to lie.
No.
It's kind of cool to
Watch the green numbers.
yeah, watch the green numbers, and then when you sell out of a stock and watch it fall like you expected it, and then you bought another stock to watch it rise. It's kind of cool. It feels great.
Makes you feel smart, doesn't it?
Yeah, it makes you feel smart. But if you want to do that all in on one company, you're gonna try to catch the top and find the bottom, and it's very difficult. It's very difficult.
Don't buy things that are already pumped. That's my advice, or not my advice, but that's what I do.
Yeah.
Yeah,
I
at least
mean,
in crypto.
Yeah, at least in crypto, yeah. But I mean, there are some, and going back to OCGN, right? Sometimes you'll get these bits right here, where it pumps, and then consolidates, and pumps, and then consolidates, and it has its big pump, and now you can see it here. It's trying to consolidate and pump, and then a little pump there, And so, I mean, like, one rule, you can't have one rule for every stock, because it doesn't also, like you can't play Nokia like you can play GME, because Nokia is a meme. Yeah, GME and Nokia, they're both meme stocks, right? But the thing with GME is that it's heavily shorted, but Nokia is a long-term hold.
Whoa, I just had a crazy idea. So like NFTs, right? Non-fungible tokens.
Yeah.
Like, do you know what fungible is? Right, you can't make another. There's only one of it.
Right.
What if we made NFTs of all these stock charts? Because that's the thing. Like, no stock chart is exactly alike, if you think about it.
Well, no, yeah, between shares, yeah.
Yeah. No, I don't. It's just like. And then you just call it art, and then you sell it for like $70 million.
Yeah, I mean, hey, that's true. That's true. There's a guy on Reddit. He makes landscapes out of charts.
Oh, that's cool.
Yeah, and so he'll like this, for example, he'll make this like in a mountain.
Can we see one, or like this is the first time?
I don't know. Let's see if I can find one.
Just a quick tangent, but
yeah, stock chart
landscape.
Yeah. Maybe this is it. There we go. This is the guy I'm talking about.
Oh, that's cool.
That's what he does. And that right there, the mountain range is the chart.
Yo, I like this.
Yeah,
no, I like these landscapes. That's like wallpaper cool. Material for me right here.
And this is the what is this called at the bottom here? MACD.
Oh.
No. This is the volume. Volume is right here.
Okay. Oh, and this is like a little city.
Mm-hmm.
Oh, that's so cool.
Yeah. So this is pretty dope. Yeah. Anyway, my thing is now that we're holding longer, going all in on one stock that is doing well, it makes a lot of sense.
At least till we recover our principal, right? We gotta. Yeah. I feel like we should do this at least until we're back to 1,000. But then given that, like, why would you want to change something that is already working, right? So if it ain't broke, don't fix it, right? So we just keep going all in on stuff.
No, I mean, like, yeah. I mean, I say we're probably gonna stay in EXPI until we either find news that something's gonna happen and we should bug out, or we find another stock that we like have no doubts about, that really like, you know?
Okay.
And then we move into that one, and then
just go from there.
Yeah, and then go from there.
Okay.
But there's so many companies that are publicly traded. There's so much research you need to do. You just gotta go for it.
Yeah. Well, I mean, at least maybe I don't know. I'm just like spitballing here, but like to make things easier on yourself, maybe you just like find an industry to just focus on, and then you can do, because it narrows your research, the amount of research you have to do, right?
So like an industry that you wholeheartedly believe in, yeah.
Or that just like you're familiar with, or well, I mean, even if you're not familiar with it, it's just like one thing to read up all about is a lot easier than 5 things to read up all about. That's true. So it's easier to do research for that.
But it's also like you know how businesses, like we talk about niches, you know?
Yeah, niches.
Yeah. You find your niche and you kind of go in there and you kind of go all in. It's not. I don't think it's like that with stock though, because you got to look at the future of the stock. Mm-hmm. Like EV is super big. Well,
you could do the same thing with a niche, right? If a niche has no future, right, and it's slowly dying off, right? I mean, it's kind of the same thing.
Right. But for businesses, like for example, film photography is not very big. It's slowly dying. Mm. You know, you can say, because there's no. I have the Nikon F6, right? That's the last film camera Nikon ever made, right? Huh. And they're still selling them, but they made it back in like I think the 90s or early 2000s, and it's the last one. So nobody's making film cameras anymore. So if you buy a film camera, you're buying something used, right? And then you have to know how to shoot the film. And a lot of classes like ACC, when I went to ACC, they dropped their film class, right? So nobody's teaching you how to shoot film, but and you have to develop your film, and you have to know how to like scan your film. It's a whole process. It's so much more harder, and now everybody's got a decent camera on their phone. You know what I mean? But the thing with film camera is that film photography is that if you become really good at it, right, you might be that film guy, and everybody knows your work as that film guy. But as a business, like, you won't ever go public. You won't, for yourself, you might be able to do well for yourself, but you can't go public. It's very hard to scale. You know what I mean?
No growth, yeah.
Yeah. So if there's a publicly traded film company that only does film like if there's a company that only makes camera film, I would not invest in that. I would not. It's a small niche, but I would not invest in that. But as you can see, a lot of the EV stocks, you look at Fisker, Plug, F-Cell, Workhorse, Arrow, Tesla, obviously. SBE merged into something else, and that popped its stock price up. EV, everybody's looking to EV for the future, and that's what it's a huge industry, and it's got a whole bunch.
It's only going to get bigger, right?
It's only going to get bigger because there's also those there's that includes the mining companies and whatnot.
Yeah,
you have to mine the materials.
Companies, right?
Yeah. And then the recycling companies, the companies that are recycling like batteries to get lithium for them, because you need lithium to make these cars. Envis works on LiDAR. That's a small part of their business, but they have really good LiDAR technology. And the thing that comes with these EV cars are everybody's trying to make self-driving cars. The newest Cadillac Escalade is it's not self-driving, but it's got the lane keep and adaptive cruise control and everything. And Tesla is trying to make Tesla, Apple, and Google are trying to do their self-driving cars.
Oh, really?
LiDAR is necessary to make this happen, because the car needs to see the road somehow, and the way machine sees road is the way machine sees things, just like how the iPhone sees things is with LiDAR. And so investing in some of these companies kind of,
it makes sense, right?
It makes sense because that is the future. Yeah, that's just future stuff. Another stock I found today is Immersion.
Wait, hold on. Scroll back up. What was Bitcoin at? Oh, 60K. Okay, sorry.
Yeah. I keep Bitcoin up here at the top, just so I can keep.
Wait, is that its all-time high? 60K?
I think.
Oh shoot!
I think it might be.
Oh shoot! Alt season around the corner. Okay, cool.
Yeah.
Anyway, let's go. Let's go back.
And so another company here, Immersion. They work on VR tech and like haptic tech. And when haptics is very important, even in any of these cars that are trying to go futuristic with their iPad stuff, right? It's really much more nicer to click something and have it buzz and feel like you're pressing a button, rather than you're just tapping on glass. You know what I mean?
Oh.
Like when you
press like buttons on like
touch
screen and stuff.
Yeah,
it vibrates.
Yeah, like when I press my phone, right, and I press hard, it vibrates. You know what I mean?
That's right.
Yeah. Here, do the flashlight. You feel that?
Yeah.
And then turn it off. It feels like you're pressing a button.
Yeah.
Yeah. And you saw that we actually did it because there was light on this table. We're not just playing with a glass phone. Yeah. And so this company is another company I'm looking at because it looks nice. It's like VR, everybody's trying to do VR.
Yeah. I think I told you about it. It was just like we should definitely be investing in VR companies.
Yeah. That was one of the first things we
were
were looking at when we first started. Now EXPI going, to go back to, how's the battery doing? We're at 40 minutes.
Okay.
So
we should wrap it up soon.
Yeah. But to cycle back, we went back into EXPI because, well, for one thing, he works for the company. Second, it's been doing very well. It's weathered the pandemic pretty well. It was hit pretty hard with the this last crash.
Correction.
Yeah, correction.
Well, I mean,
but
EXPI was going vertical. Like it
yeah,
needed to happen.
yeah. I mean, if you look at the chart, this was going like it was going straight up, and when things go straight up, it needs to go right straight back down. So it was due for a correction. And to be honest with you, man, I would have preferred to weather the stock crash correction in Nokia rather than EXPI.
Yeah, because I mean Nokia, it was mostly flat for that.
Yeah. It was mostly like so. What EXPI fell almost
50%.
50%. If you look at Nokia through the whole. Ah, come on. It's so flat you can't you can't make it through. Okay. Now this pump was when GME pumped too, but the crash started over here. So I'm gonna just do this right here.
10%.
Yeah, 10%, 8%.
Yeah, I guess because that's
10%.
That's because like Nokia already crashed already, right?
Yeah,
so
yeah.
There's nowhere to go really.
Yeah. At the tippy top, in the middle of the whole correction, it's still 12%. So 12% versus 50%.
Yeah.
And if you didn't see the last video, this little spike here is all the Bang stocks. They had a spike. Now Nokia went up and straight back down. GME went up and found some support. And it's doing its little step letter thing. You see this?
Chad
Fed. And then I mean, like, if this doesn't look like a little cup, there's people saying that this right here.
That's a cup and handle.
No. This right here looks exactly like this pattern that happened down here.
Oh.
It went up, consolidated, and then did this whole crazy thing. So people are thinking it's gonna, jump, consolidate, and then do this, but on a much larger scale.
Interesting.
Yeah. Yep. So I mean, this is that saying, scared money doesn't make money.
Mm-hmm.
Something like that.
Well, shoot, you just want to go into GME this week.
Oh man, no. I mean, okay, so I'm kicking myself in the butt because I did have a few. I had some change left. I had like $300-400 I could have used last week, and I kept it in my bank account because I didn't know what I wanted to get into. My mind keeps telling me like, hey, you should just buy calls in MVIS. And if I had bought some calls of MVIS at 14, I would be doing pretty good. I mean, I would have like almost doubled that $300, having bought a call, back when it was like 14, 13, right? Today, but for one, I don't know where it was going. I don't know if you can call this a higher high yet because, I mean, there's like this like double top, right? And it fell, and it's not quite.
Yeah, it looks like it's retesting like.
Yeah, it's 18 is a really strong.
Is that resistance or is that
resistance? Yeah, 18 is really strong resistance.
Okay.
So it hit and it went up above 18 a little bit, but as you can see, it closed at like these bars. They closed at 18. And then just fell, and now it's gotta retest it. So I think this is gonna like go sideways like this before it jumps up again.
Okay.
And MVIS, the thing with MVIS is that there's still a buyout at any time, so everybody's just like crossing their fingers. This is just the beginning, I feel, of like
of a new trend.
And I don't know. I feel like this might go upways, sideways for a little while.
I'm okay with that.
Yeah. Something nice and safe, something that's not going to give us a heart attack every other week.
EXPI, I'm telling you, for this channel, EXPI is our safe stock. Just whenever we don't know what to do it in, just dump it into EXPI. Like, easy.
Yeah. Of course, I guess unless the housing market crashes again. But I mean, yeah. Did you want to mention anything else?
I mean, not really. I mean, we're at what 45 minutes already.
45.
We still need to like
Yeah.
make these episodes a little bit shorter. Like
Yeah, a
even
little
at
bit
an
more
hour,
condensed.
they're long.
Yeah, they are.
So I think we can just call it there
Yeah.
if you wanna. I mean,
Yeah.
we gotta do leg day too.
Yeah, yeah. We skipped leg day again this week and
Scheduling stuff.
schedules have been kind of off. So yeah, we'll just go ahead and call it right there.
Oh, my car's in the driveway. I should
Oh,
probably. Yeah.
like you gotta move your car.
Yeah, okay, yeah. We gotta
go. All right. Thanks for watching, and we'll see you not next week, but the week after. All right, bye.